Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moat investing.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hi guys, just before we get into the video, the content which we're going to be covering in this video is completely based on our own perspectives and opinions. None of this should be taken as impetus to move and do something in terms of your investments. We're not SEBI registered investment advisors, nor do we claim to be. We hope that you exercise caution and risk in whatever ventures you take, and we wish you the best. And please do not treat this as investment advice. This is just both of us discussing ideas with each other with a camera turned on.
Yes. Your investment should be done with a good SEBI registered advisor, and it should be done slowly and prudently, not haphazardly by watching a video. Hi everyone, welcome back to Be Rich. I got Sashwath with me with another video. Today's video is going to be the idea behind, we see these big global brands which have been there for a very long time, and they're great investments, and they look like they're going to last forever. And we always wonder what it is that can create disruption. And these disruptions, like Nassim Taleb says, black swan events can happen. And sometimes something far away, some regional issue can turn and fluster into something big. And lo and behold, it has implications not only politically, but even economically, and it filters down into companies and affecting company lives. We have always spoken about Apple and the problem Apple's had because of the size and the reach of Apple. Today, he's brought another company which suffers something similar to that. And I thought we'll dive into that and discuss what should investors do with this kind of information. Should you wait and watch? Is it a time, an opportunity, or is it the start of a decline, which we have to be careful of? So let's get Shashwath's views. Then we'll see what to do with it towards the end of the video. Hopefully, we'll have some kind of clarity on how to deal with these kind of news and issues.
Yeah. So the company today in question is Nike Incorporated. We've talked about this company on this channel before. Both of us are big fans of Nike, very loyal to Nike. I still think they produce the best running shoes on the market. I'm biased, of course.
Same here.
I run a lot and I use Nike shoes when running, and they have been very faithful to me, and they've lasted a long time. So this is a company which personally is something which I'd want to talk about. So let's talk about what's going on with Nike. So in the past year, the stock price of Nike has gone down by over 16% in just the past year.
That's tremendous.
Yeah, and in the past 6 months, most of that decline has come in with 13.44% just in the past 6 months. So the question then is, what's going on with Nike? Why are we seeing Nike slide the way it is currently? The problem which Nike is currently facing is that it's trying to pivot. It's trying to go into something it hasn't before, which is basically, until now, they used to rely heavily on their distributors. They used to rely heavily on retail stores to sell their goods. And today, Nike, or not today, in the past year, Nike has believed that it needs to pivot to a direct to consumer sales model. So what they've been doing is they've amped up efforts to increase the scale of their website and their own personal shipping efforts to make sure that they don't need a middleman to sell Nike shoes. It's a smart move because like most clothing brands and shoe companies and other consumer-facing goods, they rely heavily on their distributors, and most of these distributors end up taking other shoe companies as well. And there's a lot of complications at play when you rely heavily on distributors to sell your products, and it can be quite costly as well because the distributor has to run a store with air conditioning and employees to be able to ship out your products. So today Nike is trying to pivot away from that, and they're trying to get into their website, which is a direct to consumer sales model, and they haven't seen much of an increase in sales. Actually, they saw a decrease in their sales in the past quarter because of that. And the fourth quarter results, which have just come out, had highlighted enormous challenges which Nike is facing. And the company was talking about an aggressive strategy to reorganize the inventory and get into the digital channel, but that has been lackluster so far for Nike at least. So revenues for Nike's direct-to-consumer segment fell 8% in the past 3 months, ended in May to $5.1 billion, while overall revenues sank 2% to $12.6 billion. So the news concerning Nike's declining revenues has sent its shares tumbling down by over 12% in after-hours trading in New York Thursday evening to $82.5, having closed at $94 for the day. So if you remember from our last video, we talked about how Nike had stashed away $2 billion for their strategic shift, and they were saving this $2 billion because they knew that China, which is one of their largest markets, was going through a consumer demand decline. What this basically means is that Chinese consumers, or the regular Chinese people who buy consumer goods, are not buying as much as they used to. And this is partly because of the slowdown which is going on in China. It's been going on since 2023, the end of 2023. They had a very rocky recovery from their draconian zero COVID policies. Their real estate sector is doing terribly, and China, which is one of the largest markets for Nike, is not doing so well. Given this information, we see that there are a lot of headwinds for Nike currently, which is why the stock price has plummeted to where it stands today currently. Today, as of when we're recording this video, it's standing at $94, and post-trading, that is after our trading, the stock is now standing at $80. So it's fallen by another 14% since the time of it trading last. So maybe once the market is open, we can consider looking at Nike as an investment choice, because last time we made the video, we said that, look, I love Nike, we love Nike, but it's a little too expensive for us. But its current PE ratio is 27.7. Its earnings per share is as of recording this video, it's come to our notice that the share in after hours has traded all the way down to $76, and its earnings per share is around $3.73, which leaves its PE ratio at around 20, which is quite a lucrative amount for a company which barely trades below the 25 PE ratio mark. And if you guys have been waiting to move into Nike, then maybe you should consider thinking about it, because right now Nike is facing a brutal battering in the stock market. So I'd suggest that you take a look at Nike's financial profiles, see how much debt they have, because that's the most important part about what's happening with Nike. So as we can see from the financials of Nike, they seem to have about $11 billion in debt, which is quite a considerable sum of money which they have in debt. It's definitely something which you'll have to think twice about before getting into, because this amount of debt is usually not a great sign. But that being said, Nike has great brand value. It has a strong moat. And yeah, we'll have to wait and watch to see how much Nike gets battered. And if it gets really low, then maybe it's something we can talk about more further on this channel. What do you think about what's happening with Nike right now?
Well, the elusive problem, it's true for Nike, and problem for Nike is global markets, and it relies heavily on sales in China. And the forecast, the retailers have said the coming year 2025 is not going to be great in terms of sales, and there is going to be another 10% decline in sales. And analysts have beaten the stock, because though you have beaten earning expectations by 20-25% in the past quarters, rolling forward looks like it's not going to be great. And so if you correct the earnings by the fall of 10% sale, and the earnings, if you correct, analysts feel that the earnings are going to drop to such levels to maintain a 25 PE or above. Nike's price should be priced at this or even maybe lower, which we'll have to wait and see. These things are a guessing game as far as earnings are concerned, because nobody can really predict what's going to happen a whole year or even 6 months ahead. But what has been happening for Nike is it's facing stiff competition from a lot of new brands which have entered the market. And yes, there is a boom in fitness market all over the world, and especially in running. Running seems to have become the flavor for a lot of young people and middle-aged people as a form of fitness, running and walking. And this culture is being fueled by other companies, sports companies and sports apparel companies, which seems to have gained a market. And a lot of these new companies, the thing about them is they're not huge like Nike. What they are is they're very local, they're very or region specific. But what they do is they in each region, Nike's got a different competitor who's really hurting them locally in that level. So what happens is Nike is not facing a single competition across the globe. And this is true for also Puma. This is also true for Adidas. And you can see it in share prices of Adidas and Puma, which have also been taking a beating because of what's happening to Nike. Its simple reason is being a global company is not as easy as it was maybe 3-4 years ago, pre-pandemic. Now being a global company is actually a weak point, a weakness. Before it was always looked upon being global, having a strong supply chain and a huge network as a very great thing to have. And even before Nike, the way they were selling this was through, like Sashwath said, through dealers and resellers like Foot Locker. And so to imagine that would be like, imagine you go to Domino's Pizza in India, and in that pizza outlet, you can either eat Domino's or you can eat Pizza Hut or you can eat his own local brand, and your pizza is competing with everybody. So when the customer walks in, he's not exclusively coming to your brand. He's coming to a shop which has all the brands available. And then what happens is each brand is offering a lucrative deal to the dealer or reseller to push his brand. And so what happens is as soon as you walk in, the waiter will say, yes, you may like Domino's, but why don't you try this? Today we have 50% off on this pizza. And as a consumer who's price conscious, you might just be like, okay, I'll try it out. You know, what is wrong in trying this out? So this is the way it's been hurting Nike. And they pulled out and they went online, and they've been doing very well online. They've been offering very creative solutions online where you can even customize your shoe to the fit, to the color, the top, the bottom, and you can choose all kinds of customization to buy the shoe. But unfortunately for Nike, what's happened is they've kind of lost the plot somewhere along the line where they've lost the touch with their base. And if you see the social media influencers they're pushing all kinds of other brands, but Nike seems to have lost its way in that. And you see that happening very well when you've been cued into social media and seeing how fitness and fitness related products are being pushed. Nike is nowhere in the game like how it used to be. Why that's happened, it's very complicated and it's very hard to understand in a simple matter of minutes, but it's there. So now comes to the question, with so much of debt, and Nike also doesn't have its visionary leader anymore. So that coupled all together, what is the future for Nike? And there used to be big brands like this. Trust me, Reebok, there's lots of them which were like this, which no one thought would ever disappear, but have all been either bought over or disappeared completely. So some of them are coming back. Like there's a brand called New Balance, which kind of went into oblivion and now is able to carve itself back and it's making small impressions in the US. But is Nike on which stage is it on? Will it bounce back from here? It's very hard to say. But is it worth taking a gamble? I would say yes. If you have some extra money which you would like to take a long shot, moonshot on, and you don't mind taking a risk, then Nike is worth considering in my book still.
So I agree with you, and I just crunched the numbers while we are recording this video, and the working capital is actually the amount of debt they have in the long-term debt. So working capital being their total current assets minus total current liabilities. So this is the amount of money which they're circulating to keep the business going. So today, if they were to wrap up their business, they could cover their long-term debt and have some of the money which they have in their long-term assets. So I'm just talking about their current assets, which is enough to wipe out both their total current liabilities as well as their long-term debt. So that seems promising, to say the least. It's not like they're insolvent or something.
No, they're not insolvent. But the problem is they kind of lost their whole push on marketing. And you don't see Nike the way it used to be. Marketing was done for Nike has completely changed. And it's very apparent. And like Sashwath is into running, I'm into doing whatever fitness I'm doing. Because of my own loyalty to Nike, I continue buying Nike, and the way my foot is, it suits me. But if I see in the gym and all that, you do see more and more other brands being pushed. And these big celebrity endorsements make a big difference. And Nike seems to be losing its way in that also. And this whole subculture, Nike missed out on. I would say also credit to the competition. All of them are woken up to this, the way Nike has been pushing its products over the years, and they've taken Nike's playbook and used the playbook against Nike directly. And in terms of pricing, in terms of quality of the product they're offering, it is pretty close or even better than Nike in some aspects. And Nike has to really look long and hard and figure this out. Not that they can't, they can. There's no doubt about it. But I would still bet on Nike. I mean, it's hard to see where everything will be 10 years from now, but I do suspect Nike will be there 10 years from now, stronger and maybe even better in 10 years' time. And maybe, like Sashwath, I do agree, if you do have cash, which you don't need for the next 5 to 10 years, Nike might be a good opportunity to look at where you can park some cash. So anyway, I hope you found this video informative and entertaining about Nike and what's happening with Nike, because I'm sure a lot of you saw the stock price plummet. I was wondering what happened to Nike. And this is what's been happening to Nike. And I hope that gives you some clarity. Thanks for watching the video today. I hope you enjoyed it. And we'll see you in the next one soon.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.